The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive deep into the uncharted territories of niche investment strategies that promise to redefine wealth. I'm Nadiah Koh. Geopolitics and market volatility is the hottest topic on the dinner table now. Seems like everyone and your uncle is talking about Donald Trump and his potential next moves. While global headlines focus on political tensions and uncertainty in global markets, there's a quieter but lucrative story emerging in Asia: deal-making activity, which is showing signs of a comeback. In fact, Asia-Pacific has come out of the books much faster than the US and Europe in deal-making activity in 2025. The volume of mergers and acquisitions in Asia-Pacific is up 19% from the first quarter in 2024, helped by pending blockbusters such as the sale of CK Hutchinson's Holdings Ports and 7-Eleven operators 7&I Holdings. So what's driving this optimism? Which sectors are emerging as the biggest winners? To find out more, joining me now is Jason Saw, Group Head of Investment Banking at CGS International Securities. Hi Jason, welcome to the show.
Hi, thank you for having me.
All right, Jason. So Asia-Pacific deal volume jumped 19% in the first quarter of 2025, outpacing the US and leaving Europe in decline. What's driving this optimism? What structural or economic factors are behind this outperformance?
I think if you look at it, market move in cycles. What we are seeing in Asia-Pacific is really just a pickup from a very low base. Right. Last couple of years, I think China has been very quiet. US and Europe has been taking the lead. But we are seeing a reversal since end of last year. In fact, if you look at the Hong Kong market, a lot of fundraising activities and IPO activities actually happened in the second half. Mm-hmm. So we have a lot more capital at work, right? Corporate balance sheet remains strong, market coming out. I think that's what's driving a lot of deal making in Asia-Pac this year.
CGS International is witnessing a surge of activity on the horizon, with 8 to 10 major deals expected to hit the market in coming months. Are we seeing a longer-term shift in deal-making power towards Asia, or is this a short-term rebound from earlier stagnation?
I think most of the corporates are all still continuing to seek growth, right, in this market. In fact, what we've noticed is a lot of the large corporates, the stronger ones, are getting stronger. They have built up a lot of capital on their balance sheet, and of course they're hungry to do deals, to build their presence in the markets that they are in. And on top of that, I think the smaller companies are also seeking fundraising, right, to really go for growth, taking new markets, new customers. And I think this is really the year where a lot of these companies, putting themselves in the right position to seek growth.
Right. So which sectors are currently driving most of the M&A activity across Asia-Pacific? Healthcare, digital infrastructure, or energy, the standout areas?
Yes, I think what you have mentioned are those areas that most funds are focused on, right? Healthcare, renewable energy, consumer. But maybe perhaps we don't forget that financial services sector is one that I think could really stand out, right? Banks today continue to generate a lot of capital, especially those in Southeast Asia and even in Singapore. Banks are giving out, more dividends and have excess capital. I think some of these could be put to work, right? There's been a lot more speculations of banks doing M&A, and perhaps we may see more things coming out from that sector.
Right. Hong Kong has become the world's second biggest IPO market this year, with major offerings from Xiaomi and BYD. Is there a strong correlation between IPO momentum and M&A appetite in the region? What's behind this trend?
If we notice since the end of last year, there's been a lot of concerted effort by the Chinese government as well as private enterprises to work together to, come back to growth again. And what we have seen in the market is a true reflection of that, right? And I think with the private companies raising more money, definitely we'll see more M&A. And not just that, I think we will see a lot more FDI into the overseas market as well. There's a strong push by the Chinese to seek overseas growth. And I think what we are seeing is just the start.
I see. Speaking of that M&A growth, China is seeing a resurgence in M&A appetite. In fact, Chinese firms are accelerating their internalization strategies, with Southeast Asia playing a pivotal role. What makes Southeast Asia particularly attractive to Chinese investors right now? Market size, regulatory environment, cultural ties, or even supply chain advantages?
I think there's a few perspectives that we can put that question into. I think one is definitely new markets, new population to serve. Right, Southeast Asia has like 600-700 million population. The Chinese are very good to make products. They have some very good products in China across consumer, EVs, and I think Southeast Asia is definitely a market that they want to serve. The competition in China is really intense. When they come to Southeast Asia, they realize they can make more margins, more profit per unit that they can make in China. So that's interesting. And I think what's interesting on the second point is really on neutrality. Right, Southeast Asia is a region that serves both US, Europe, and even the Chinese market. So I think with the recent tariff news and uncertainty in the market, more Chinese companies are really seeking or stepping up their interest in Southeast Asia.
Okay, speaking of that, which Southeast Asian countries are benefiting the most from this trend, and why? Is it primarily Vietnam, Indonesia, or are we seeing a broader regional interest?
I think the interest has been brought from our conversations, right? Malaysia continue to be a really great place for them, especially in terms of the ease of doing business after Singapore, right? There's a very good population base, educated, workforce, and there's a lot of high-end sectors that they can go into. I think after that will be definitely Indonesia is big on the radar, right? 200 million people, a lot of consumer goods will definitely go into Indonesia. And I think there's really strong interest to do more work in these two countries.
I see. So, taking a broader look, which sectors are currently driving the most outbound interest from China? Are we seeing a clear shift towards priorities like EVs, semiconductors, healthcare, or AI?
I think three sectors that I would put, the interest being the strongest. One is definitely consumer, right? We will definitely see more products being introduced to the Southeast Asian market, whether it's your F&B. I think in Singapore alone, you see many F&B chains, started by Chinese building up their presence here, right? On top of that, you have snack companies, you have drink companies, all building up their brands here. And of course, the EVs, right? We're still at the early stage of adoption in terms of EV cars. More brands will flood the market in this area. And maybe another sector is really in terms of healthcare. I think there are many medical devices as well as medicinal companies in China that's proven itself in China, right? In every country that they go into, they definitely need the regulatory approval. And I think, this is an area where we might see a pickup in terms of market presence.
So speaking of healthcare, Jason, what is your outlook for Southeast Asia, particularly in light of potential opportunistic M&A in sectors like healthcare, fintech, and digital infrastructure?
The interest has been really strong from our conversations, right? We have been, I think since the last 2.5 years when we fully acquired by China Galaxy, we had constant engagement with Chinese corporates as well as SOEs. In fact, our parent company, CIC, do come out often to Southeast Asia with us. And from our discussions, really, healthcare is one area. And of course, infrastructure projects as well, right? The Chinese are, eager to export some of their expertise in infrastructure, in renewable energy, in healthcare. And I think, this year, likely we'll see more deals being done in Southeast Asia. And this is across partnerships, across joint ventures, across even FDIs into various countries in Southeast Asia.
Right. So how important will Southeast Asia remain in China's outbound investment strategy over the next 5 to 10 years?
I think no doubt following what has happened in the last 1 month or so, right, Southeast Asia will become China's bigger market in the next 5-10 years. Everyone is trying to diversify their exposure from the US. And I think the trade flow between Southeast Asia and China is likely to grow much further.
I see. So Jason, before we let you go, looking ahead with ongoing market volatility and geopolitical risk, do you expect deal-making to remain opportunistic, or will more strategic long-term plays dominate the landscape?
I think from today's environment, there's going to be a lot more strategic deals that will happen. Of course, financial return matters, but that ability to deepen the presence, to land grab in Southeast Asia, I think is going to be a really strong case, especially this year. So that is going to be a real catalyst for companies, whether they've been here for 10 years or whether they're new, to really build their presence here in this region.
I see. Amazing. Thank you, Jason, for your insights today.
Thank you.
That was Jason Saw, Head Group of Investment Banking of CGS International Securities. This has been the Wealth Tracker with me, Nadiah Koh.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.